Here is your April 2022 market update. You're definitely going to want to watch this one. Change is in the air in the real estate market. We've seen a lot of things happen so far this year with the Fed raising rates, mortgage rates increasing from low threes to mid fives, and a lot of rhetoric from the Fed that they're going to continue to raise rates, and that monetary policy, it affects the housing market. So here's what happened through the end of April in the greater Philadelphia area, and then I'm going to tell you what it means for people looking to transact, whether it's on the buy or sell side through the rest of this year and early 2023. So year to date, through April, the number of sales, they've kind of fluctuated and been a little all over the place in Chester, Delaware, Montgomery counties, and Philadelphia. Year to date, the number of homes that have sold are down 3.9% in Montgomery County. They're down 8.1% in Chester County. They're up 4% in Delaware County and up 1.3% in Philadelphia. And that just shows you how local the real estate market is. We're seeing an increase and a decrease depending on what county you're in or if you're in the city. The median sale price year over year is up between 6 and 12.5% compared to this time frame, January through the end of April in 2021, same thing for 2022. So we're still seeing prices increase despite sales being a little volatile. Days on market is ranging 21 to 23 days in the suburban counties, and 42 days is the average so far this year in Philadelphia. So we're still seeing record lows in terms of time on market and that lack of stale inventory. The percentage of the asking price received is between 100.8 and 102% in Chester, Delaware, Montgomery counties, and 96.7% in Philadelphia. So that's what the seller gets when the home goes under contract relative to the asking price. New listings, again, are outpacing pending sales for the month of April, meaning there's more new homes that hit the market than pending sales. And it's not just a few units this time like it was in March. We're seeing anywhere from 50 to 100 plus more active listings depending on the county than pending sales. That's a really significant change from what we've been seeing over the past 6, 8, 12 months. Mortgage rates, they're up in the low to mid 5% range, depending on what your credit looks like. Where a 30-year fixed is coming in, that's been a little more volatile. And we know that there's some uncertainty in the economy right now. We're seeing the stock market go up and down. So that's what happened through the month of April. So what does it mean? And here's my clear takeaways I have. If you're looking to sell a home right now, we're seeing that inventory is starting to creep up a little bit. We're seeing that active listings are outpacing pending sales. So because of that, if I was thinking about selling later in the year and also knowing that rates are going up, so buyers can't afford as much as they might have thought originally, I'd be throwing my original schedule out the window and looking to take advantage of the current market conditions. Because inventory is still low, we're still at that less than a month supply in the suburbs and about a month and a half, 2 month supply in the city. So it's still low, but we're seeing it go the other way for the first time since March, obviously, but before that, for the first time since last fall, we're seeing inventory creep up. And when there's more options, that gives buyers more choices, which may mean not as strong of a contract and an offer coming in for sellers. So I'd be looking at taking advantage of the supply and demand issue because there still is a ton of demand out there with 78 million plus millennial home buyers. Figure it's about 34, 35 million buyers coming to the market when they get married, and the people that don't buy, that's driving the market right now, just like the baby boomers did. We've been talking about it for over 12 months now. So that would be my advice to anyone thinking about selling. Take advantage of the market. If you're looking to buy, there is a lot of money at stake right now if you're looking to buy a home. There's a study from Keeping Current Matters that came out. If you bought a home at $360,000 at January 2022, first month of the year, there's the potential to raise your net worth over $96,000 in 5 years. And if you're not buying a home, well, now you've seen rates go up. And that's likely to continue because of what the Fed said they're going to do. They're going to continue to raise rates. So if rates continue to creep up, prices are going up, so the acquisition cost is going to be higher. There is very clearly a cost to waiting. And we've seen some folks have to adjust their price points because rates went up and they couldn't afford what they once did. I'd be looking at getting aggressive, targeting homes that are maybe on the market 2, 3, 4 weeks if you're worried about getting into a bidding war. this is a time when the market starts to go the other way. You don't want to be catching this at the tail end because you buy the home with your monthly payment. And there's a lot of money at stake. You're talking about almost $100,000 in your net worth over 5 years. That's a reason to act and to get into something now and start to build equity instead of looking at the alternatives, which are paying rent, and really that means paying someone else's mortgage. What I know is that this is the way things are going to start to go now. We're not looking at 10, 15 offers coming in on properties anymore. It's going to be maybe 2 or 3, 4 or 5. And certainly the best homes always sell quickly. They always get the most interest. But we are seeing very clear signs that the market's going the other way. So the message is move up your time frame if you're a seller to take advantage. And if you're a buyer, don't wait because it's going to cost you a lot of money. And these are tangible, real costs. Everyone's situation specific. I just threw a ton of information at you there. You got questions, you need to know something, feel free to reach out. We can go over your situation in detail and help you make a winning financial decision. Catch you next week.